How can you use life insurance to buy real estate? So many people think of life insurance as something that's only for when you die. People think of life insurance as an extra bill or an expense, when in fact it's another process to be able to use for your banking function. So rather than thinking about it as paying a certain amount every month for something that you die, it's actually something that you can use as an alternate strategy for your banking function. So most people, they make money and they put it in the bank. They put it in the bank, then they spend money, and if there's anything left over, they maybe save something. The idea of infinite banking concept is that you add this process of putting this money now into the life insurance company, into your policy. And then when you need money, you borrow money from the life insurance company, and then you can go spend it. And rather than your savings being the last thing on the table, where most of the time people don't save, in the last 20 years, savings has gone down from 10 to 3.8%. Rather than doing it that way, now whatever's left over between what you put in and what you take out equals your savings. So you're able to save more money utilizing life insurance as your banking strategy instead of the traditional way that Americans usually save and spend. And so therefore, whenever you need to borrow money, you can utilize a policy loan from your life insurance company. And an example of doing this with real estate, some people buy real estate in cash. When you buy real estate in cash, it is true that you're saving interest that you would have paid otherwise, but now you're depleting your savings. The other option is to borrow it in the form of a mortgage, where you're paying money to somebody else and now you're in debt. And so rather than using hard money loans to bridge the gap between what you have and what you need to put down, you can actually become your own banker and utilize a life insurance policy loan. And so in this example, let's say that you are making about $10,000 a month, which is $120,000 a year. You move 120 grand down here into your bank, and then you move that money into your life insurance policy. If you're going to buy a house per se, and it's a $500,000 house, and you need to put $100,000 down, you can then call the insurance company and borrow $100,000 out of your life insurance policy and then go invest it in real estate. And yes, you'll be paying an interest rate to the life insurance company, but as of 2/15/24, the market loan rate for the life insurance companies that I work with is only 4.85%. So you can borrow money out of your life insurance policy, invest it in real estate, and if you want to buy a $5 million home, you can pool 10 other people's money. If you multiply this times 10, you can just go ask 10 people to do the same thing. And now you're using OPM, you're using other people's money, you're using the insurance company's money to now invest in real estate. And rather than depleting your savings or financing the entire thing and paying interest, typically a mortgage right now is 7 to 10%, and hard money loan is going to be 10 to 20%. Rather than using alternate forms of money, you can use your alternate bank, and therefore you control the whole situation financially. Now, if you go borrow at 4.85% and invest it at a home, you have to treat yourself like the bank. This is the major challenge that people have when it comes down to borrowing money from life insurance, because what really, you don't have to pay any money back to the life insurance company. It is not required. There is no policy schedule, payment schedule, there's no credit check, there's no financial documents that they ask for. You create your own payment schedule, and if you're a responsible person financially, then it would be best to treat yourself as a mortgage lender or a hard money lender and pay yourself the 8.85% that they would have charged you otherwise, You pay the life insurance company back the 4.85% on the policy loan. This extra 4% is profit that will then go fund more money into your life insurance policy, and therefore you'll be able to compound your money, compound your cash, regain control of the financial process while also investing in an income producing appreciating asset, which is real estate. And so if you can marry the real estate investing concept with life insurance, this is gold. This is not a hack. This has been something that has been happening for hundreds of years, that the Rockefellers, the Morgans, the Vanderbilts, the Rothschilds have been utilizing life insurance to borrow for income producing appreciating assets such as real estate. And this is something that I'm getting into myself, and I would highly recommend you look into further. If you would like more information, DM me below, reach out to me through my website, through social media, and I would love to sit down with you for a free financial consultation to show you how we can build wealth together utilizing life insurance policy loans and investing it into other income producing assets such as real estate. Have an awesome day.